Today we'll talk about an interesting indicator which maybe will shed some light on the situation with the current price action of Bitcoin. But before that, I would like to tell a couple of words which maybe support some of the bears out there, because yesterday I was telling why I think that the price is more likely will go up, but this is my personal opinion. And while we still have some positive price action today, let's be unbiased, let's look at some historical price action. So if you'll switch to the logarithmic chart, then you can draw such channels. I showed those probably in the end of March or something like that. This is ascending channel, a descending channel, and after the price is going above this, we see the bull rally with the acceleration of the price rise, and technically we are very close to go above this line. The price actually went above that but couldn't hold there, and now we had the drop below this line, and so at some point it could be treated as a false breakout. But on the other hand, since we don't have a flash crash, we may say that maybe the more often we test this line, the more likely we will break above that. And if we will break above that, then something like this may be expected. I mean, much higher and faster growth. But this is not the bearish argument. The bearish argument which I was going to tell you is, well, many people are looking at 2018 and saying that, for example, let's see, this is our growth that we had in April 2018, and this is how it happened. Then we had the drop after that. So they found similarities, well, maybe not this growth, but some other similarities with the current rise, and they say that because of those similarities, we need to drop. Well, I wouldn't really draw such analogies because this was the bear market, right? And of course, although it is a sort of a reflection of the same price action but inverted in terms of the price direction move, but still the sentiment is different, the slopes may be different, and so on. So what I would better prefer to look at is the previous bull market. And previous bull market, especially when we had such a growth like fast and strong as we had recently in the current situation, then you would see that on the logarithmic time scale, with such a growth, we always had a correction afterwards. And if you look closer at these corrections, then you would see that there is a kind of the support line for the lows at those corrections for all three major ones which we had during 2017. So you see we had this test of the support 1, 2, 3, 4, 5 times, and on the 6th time we broke it downwards. The same here, 1, 2, 3, 4 times. On the 4th we had the V-shaped crash. The same here. So technically, currently you would see the same formation with the support line, which was tested several times, well, maybe even from here 2, 3 times, even yesterday 4th, and we couldn't break it yet. So if you would expect that the same behavior of the price action will repeat from 2017, then you would have to see such a huge and fast drop at some point. Of course, it's not necessarily to happen. I mean, nothing is set in stone, but just based on the statistics, on the history, this should happen. Saying all of that, I still remain bullish, but this is me, it's my personal opinion, and I explained my arguments in the previous videos. Now to the indicator. The indicator which I was going to talk about today is DMI, or Directional Movement Index, and as you can see, it contains of 3 lines. It may look a little bit confusing, but it's actually nothing to be confused about. Red and blue lines are just reflecting the direction of the price. So if red is much higher than the blue, then the price is rising. If opposite, for example, like here, then the price is going down. And the black line, which is ADX, or the average directional index, it shows the strength of the trend which we have. For example, you see the drop from 6,000 to 3,000 was quite severe, and we had the increase in the black line. So the same we had during the rise right here, the black line is going higher. So it's not calculated that simply. You would have to look at the true range first. You need to have the exponential moving average of positive and negative directional movements, and then you would have to calculate the directional index dx by this formula. Then you'd have to calculate the average ADX by this formula. So it's not really easy to imagine like what does it mean from the mathematical standpoint. But in simple words, by the way, from Fidelity. Positive directional indicator shows the difference between today's high price and yesterday's high price. Negative directional indicator shows the same but with the lows. And ADX is the smoothing of DX, which is calculated by this formula. But the main thing which you need to know to use this indicator is that when we have the huge difference between these blue and red lines, then the price moves in one or another direction, having higher volatility, and the higher ADX value we have during this move, the stronger the trend is. In fact, it looks very similar to the vortex indicator which we discussed in one of the previous videos. It also has these two parts of the indicator with like two different directions, and you see the intersection of these curves. And basically the same as in the vortex indicator for DMI, you also may look at these crossovers as the signals to buy or sell. For example, here you see the crossover, which means that we need to sell because the blue is above the red, and it also must be supported by the strength of the trend by ADX. But it actually makes quite a few of the false signals, so you need to support it with the other indicators and price action in general. But what is interesting, you can also look at the divergences. For example, if you look at the price right here, then you could compare this high and the next high over here, but you would see that although this is higher than this one, on DMI, positive DI is actually forming a lower high over here. And at the same time, although the trends seem to be strong with the ADX high, and usually it is considered to be strong when it is above 25 level, but over here again you can see that this high is lower than this high, so we are going up, but at the same time ADX is going down. So this high corresponds to the higher high on ADX, and this higher high corresponds to the lower high on ADX. So this is a bearish divergence basically. So the trend is getting weaker, and recently you see the difference between red and blue becoming smaller and smaller. Eventually we finally have this bearish crossover. So shall we trade it? So the answer is it represents the potential of the reversal, or at least short-term reversal for the price going lower. But look at the ADX. ADX is actually going down. So if the ADX is going up when we see the increase between the red and blue, then it means that the price change is supported by the strength of the trend. And here it is actually opposite. So although we may see the price going lower, and that would lead to the increase of the gap between the blue and red, and also increase in the ADX, so far there is no 100% confirmation for this drop to be strong. And now many people are thinking like, what shall we do? What shall we expect for the price going to whatever 6,000 or even 7,000 and then buy, or shall we buy right now because the price will go up? Well, in my opinion, the answer is simple. If we again will return to the previous bull cycle when we saw this moves up and down, then you would see that despite we had this crash with a very sharp drop, in principle, if you are not trading it with a leverage, the only bad thing which would happen with you is that you'd have to wait few more days or maybe a couple of weeks until the price of the Bitcoin will return to the previous level, and then when you actually have more movement to the upside. The same here, it's actually very sharp and returns back very soon. So even if you would have to wait here when the price will go much lower, if you'll buy at this current stage, then it will just take, I don't know, maybe a couple of weeks or something. Of course, nobody can tell, but still, until the price will return to the previous level and probably will go higher. Of course, this would work if you believe that all that price action is within the global rising trend of Bitcoin price. If you think that this is a kind of a bull trap maybe, then the price could return to $3,000 or $2,000, and then nobody knows when it will go to the new all-time high again. But I think, like me personally, I think that we had enough confirmations of the fact that we are in a global rising trend. So the worst thing that could happen is that we'll go to some more or less deep correction and then return back and then have more and more rise. So by not buying at this level, the only thing which you are doing is that you're betting on the fact that you may see the correction and buy lower. But at the same time, if this will not happen, then you appear to be without a position. So as usual, some diversification, some splitting of your position is probably the best solution, but we'll see how the price will evolve. And I would like to end this video with a little announcement. You probably know Alessio Rastani. He's doing technical analysis on Bitcoin and actually some other assets, including commodities, stocks and everything. So he has like almost 200,000 subscribers on YouTube. So apparently many people appreciate what he is doing. So he was really kind to agree to make a video with me and answer some questions about what he thinks about the Bitcoin, the current condition, and in general technical analysis. So of course I will prepare my questions, but if you want to ask something, please add your comment in the comment section about what do you want to ask. And also look through the other questions, please like them so I would pick the questions which you guys like the most. The video is planned in the end of June, so you have plenty of time. But in any case, I'm looking forward to it, really excited. So let's see what he will tell us. And that is it for today, guys. I hope it is useful. Thank you for watching.